Okay, so we are doing question number 8 of your book, which is Feb-March 2019, paper number 32. It's Clubs and Societies. It will be on page number 57 of your book. I hope you can see it. We are required to prepare a few things. What are the few things that they want us to prepare? First thing they want us to prepare is an income and expenditure account. And the second thing that they want us to prepare is a statement of financial position. Whenever you're reading the sum, you will do the markings as to what things will come where. So this is the information that is available to us on 1st July 2017. That means our year is starting on 1st July 2017 and the year is ending on 30th of June 2018. I have my clubhouse at costs, which becomes my non-current assets. Accumulated depreciation, that means the depreciation that is charged up to the date. It will be NCA second column. I have my equipments at costs. This will again be my non-current assets. Accumulated depreciation on equipment. This will be NCA second column. These are details that is available to us on the first day. That is at the beginning of the year. At the beginning of the year. I have subscriptions in arrears. That is my outstanding subscription on the first date. And subscription in advance. That is my pre-received subscription on the first date. I should know anything that is outstanding is added and pre-received is subtracted if it is for the current year. If it is for the last year, I will do just the opposite of it. So this will be subtracted and this will be added. We are also given the accumulated funds on the first date. That means I will say this is accumulated funds on 1st July 2017. We have certain expenses for the year. Operating expenses is other expenses. Staff salaries, again it comes as a part of other expenses. Subscription received during the year. And I have restaurant profit. In just reading, I have restaurant inventory, restaurant trade payables. So I have on the last date, restaurant inventory. So this will become my closing inventory. And I have restaurant trade payables also. There is a loan from a club member that is repaid after a year. So this will become a part of my non-current liability. I have closing cash. I have subscription in arrears, that is outstanding subscription of the current year. So this will be added and I have pre-received subscription of the current year. So this will be subtracted. When I am seeing subscription, let's find out subscription income for the year because that is the first thing that we do in income and expenditure account. We have all our incomes, which is subscription. Okay, so let's see what are the details that we have related to subscription. So first we write our income, and our first income would always be subscription. What is the subscription that we have received? 544,000. We've already done the effects of subscription here. This is at the beginning of the year. This is at the end of the year. And we have known the effects of it. So just keep on doing. Minus 7,000 plus 3,400 plus 8,200 minus 2,400. Let's see how much are we getting. Calculate and get the amount for me for subscription. So it would be 544,000 minus 7,000 plus 2,400, sorry, plus 3,400 plus 8,200 minus 2,400. So my subscription income for the year is 546,200. I also have restaurant profit 12,600. That means I have calculated the profits and losses from the restaurant and they have given it to me. So restaurant profit is 12,600. Please see if there is any other information that is related to restaurant. So my restaurant profit is 12,600. Let's check for information that is related to restaurant. Restaurant inventory and trade payables is there. Accrued restaurant wages had not been accounted for. So that means there was outstanding wages of the restaurant, outstanding expenses of the restaurant, which I did not account for. So these outstanding expenses of the restaurant, what will it do to my profit? Will it increase my profit or will it decrease my profit? So these outstanding expenses will decrease my profit. So I will decrease my profit by 3,300. So it becomes 9,300. Any other income that I can see? I cannot see any other income. So it becomes 555, 500. These are the incomes. Let's look at the expenses. Depreciation is charged for the clubhouse at 4% on straight line method and for equipment on reducing balance method. And also the loan that I have taken from the club member, I received it on 1st January 2018. That means from Jan, Feb, March, April, May, June. I will have to remove 6 months interest on this loan that I have taken, and this interest is to be paid at 10% per annum. So let's account for all the expenses. Let's account for all the expenses that we know of. First expenses that I would see over here is the depreciation. Let's finish it off. Depreciation from clubhouse and depreciation of equipment. So first, depreciation of clubhouse. How much percent? 4% on cost. Cost of the clubhouse is 300,000 and 4% of it is making it 12,000. So this is my first expense. Depreciation on clubhouse. This 12,000, when I am accounting, I will add it because I also have to prepare a statement of financial position, and this will become expense for the year. Second, I have depreciation on equipment. How much is my depreciation on equipment? It is on reducing balance method. That means I have to reduce the value. So it is 140,000 minus 64,000. Reduce the value into 15%. So it is coming up to 11,400. So your second expense is depreciation on equipment 11,400. And this you will add it over here in accumulated depreciation. Okay. Now let's see what is the third expense that you could think of. This part is done. I have operating expenses 192 and there is no adjustment related to operating expenses. So my third expense is club operating expenses. And club operating expenses is 192,000. Fourth is staff salaries. So in income and expenditure account, I will record all the expenses. So I have club staff salaries of 326,000. And my fifth expenditure that I know of is the loan interest. Okay. So what is the loan interest? My loan interest would be loan is how much? Loan, 10,000. 10,000 is your loan. Interest is paid at 10% for 6 months. So loan interest is 500. So this is how I have my 5 expenses. So I will record my 5 expenses. I will record my 5 expenses. First is depreciation on clubhouse. Second is depreciation on equipment. Third is club operating expenses. Club staff salaries. And last is loan interest. Whatever you got, subtract the expenses and arrive at surplus or deficit. Total expenses is 541,900. We'll minus it from the income. I'm getting a surplus of 13,600. Now, we'll do the theory later. We also have to prepare a statement of financial position. We also have to prepare a statement of financial position with the given information. So we will prepare the statement of financial position. This is the information with the adjustments. First thing that we always record is non-current assets. What are my non-current assets? This would be cost, accumulated depreciation, and net book value. So what is an cost of the asset? First is clubhouse. Second is equipment. Cost is the same. There is no buying and selling we are doing. So 300,000, 140,000. Depreciation will be 156 plus 12. So it becomes 168,000. And this will be 64 plus 11, 400. 75,400. I will subtract it and arrive at the net book value. Let's get the net book value. First is 132,000. Next is 64,600. My total is 196,600. Total cost of the asset is 440,000 and 243,400. Let's crop this. We've already done with this. Clubhouse at cost depreciation is done. Subscription in arrears and advance, I don't have anything to do with it. Subscription in arrears and advance right of the beginning of the year, I have nothing to do with it. Now what I have to see is the non-current assets. Then you will have your current assets. Let's see what are your current assets. Current assets has trade receivable, closing inventory, cash in hand, cash at bank, okay, and other receivables. So I have an inventory over here. So the inventory is 23,400. This is current assets. Subscription in arrears, outstanding income is current assets, and subscription in advance is current liability. I have cash and cash equivalent. So I have cash and cash equivalent. How much is cash and cash equivalent? 7,700. And I also have subscription in arrears. How much? 8,200. So this is my total current assets, which is 39,300. Non-current assets plus current assets is going to give me my total assets. So my total assets is 235,900. Let's see. Then what will I do? I will start with capital and liability section. So it is going to be started with accumulated funds. Accumulated funds at the beginning of the year. So I would say accumulated funds at 1st July 2017. This is 194,000. If you have any surplus, you will add to it. So what is your surplus for the year? Your surplus for the year, you get it from the income and expenditure account. So add surplus for the year. What is your surplus for the year? 13,600. There is no transfer to accumulated funds and there is no special donation that you've received. So your total accumulated funds will become 194,000 plus 13,600. It is 207,600. Then you have your non-current liability. Check what is your non-current liability. The loan that you have taken. So non-current liability, it is your loan from members that you have taken, repayable 2022, and it becomes 10,000. Then you have your current liabilities, trade payables, other payables, pre-received income. So let's see, I have restaurant, this all will not be a part of it. So I have restaurant trade payables. I have restaurant trade payables, which is 12,100. Pre-received income, it is subscription in advance, which is 2,400. I have outstanding wages, 3,300. And there was also outstanding interest loan, fifth adjustment, outstanding interest on loan. So this is 500. I do the total of all this. What is my current liability? 12,100 plus 2,400 plus 3,300 plus 500. It is 18,300. Add all the three, it must be equal to your total assets plus 207,600 plus 10,000. So it is 235,900. So your total assets is equal to your total liabilities. What is the D part? 1st July 2017, you have the following balances available for the restaurant. So that means at the beginning of the year, you have the following balance available. You have opening inventory and you have trade payables. They had also given us some information about the restaurant on top, wherein they said on the last date, they have this closing inventory and they have closing trade payables. They want us to find the increase or decrease in the calculate the restaurant cash surplus. That means they want us to calculate cash deficit. We also had restaurant profit as how much? What was our restaurant profit? Our restaurant profit was 12,600, but 3,300 was outstanding, 9,300. So restaurant profit is 9,300. How will I calculate restaurant cash surplus or cash deficit? Let's say the profit that I have of the restaurant is 9,300. My opening inventory was 15,700 and my closing inventory was how much? My closing inventory was 23,400. That means I have purchased more of inventory. Okay, I have purchased inventory and money might have reduced because of increase in inventory. So, increase in inventory will cause a reduce in the cash. So 23,400 minus 15,700. This is going to reduce my profit, cash profit by 7,700 because you purchase more. First, your trade payables were 13,900. That means you had to pay this much. And now they are saying closing trade payables is 12,100. So what you had to have to pay, or you had to pay at the beginning and at the end is reduced. That means you might have paid something. So if you might have paid something, so cash will decrease. So decrease in the trade payables is 13,900 minus 12,100. So there is a 1,800 decrease in your trade payables. Also, you have not paid something. You have not paid your accrued wages. If you've not paid your accrued wages, that means your cash has increased. You have taken some credit and kept cash in your hand. So there is increase in outstanding expenses that will increase your cash balance. So increase in outstanding expenses is 3,300. So you have net cash surplus from restaurant as 3,100. When you're finding your net cash surplus from restaurant, see the things that lead to outflow. Things that lead to outflow, you will subtract. And things that lead to inflow, you will add. Okay, so this is leading to you're taking credit from someone, so this is leading to inflow, so that is why I'm adding it. You've purchased more inventory, so this is outflow. You have paid your trade payable, so this is outflow. So when you're finding the cash surplus or deficit, whatever things that is leading to money going out, subtract, and whatever credit that you're taking, it's leading to inflow, you will add. Let's do the E part. My E part tells me the club plans to improve the clubhouse next year. And when I am going to improve it, I'm going to incur a cost of 50,000. The chairman is considering financing the improvements by either taking loan from members or taking bank loan. You need to evaluate whether the club should finance the improvement by members loan or bank loan. Okay, so you need to give advantages and disadvantages of members loan and bank loan. Let's see what your responses could include. What will happen if you take what will happen if you take a bank loan, and what will happen if you take a member's loan? Okay, if I take a bank loan, what will happen? I will have to give a lot of paperwork. Okay, but if I take a member's loan, if I take member's loan, the paperwork would reduce. Members loan is quicker to obtain. Bank loan is difficult to obtain. Members loan will not require any collateral, but bank loan will require some security. However, whether I take a members loan or whether I take a bank loan, I will still have to pay interest. I will still have to repay the loan. And I have already taken a members loan of 10,000 before. So members may refuse to lend me more. Okay. So accordingly, if you think that the bank is willing to give you the loan, you can take the loan from bank. But if you want immediate money, you can take the loan from members. Okay. You have to give advantages and disadvantages. 1 mark will be for your decision. Okay. Always remember, whenever they ask you about evaluating, give advantages and disadvantages of both the options, and then say why you do what you're thinking to do. The next question was, state two differences between an income and expenditure account and receipts and payment account. You already know receipts and payment account is only going to give you money coming in, money going out. It's cash basis. And your income and expenditure account, what is it going to give you? Income and expenses. So it is going to take into account all the accruals and prepaid. So receipts and payment account is a summary of your cash book, while income and expenditure account is like your income statement. Receipts and payment account applies cash basis. Income and expenditure account applies accrual basis. Receipts and payment will record only cash transactions. Income and expenditure account records non-cash transactions. So you're comparing and you need only 2 points to compare. You can write it according to whatever you feel and whatever you remember. So the question that we did right now, where we had to prepare income statement, balance sheet, Feb-March 2019, paper 32. It will be on page number 57 of the book that I have provided you.